Hello subscribers, welcome to the Fast Profits Daily. I am Brijesh Bhatia. Markets have come back very strongly. In the March where the sentiment was very bearish, people were talking about 14,000, 15,000, and even somewhere on the social media was talking about 12,500 as well. But the start of the April, the turn of the table taken back Nifty towards 17,700 now. We are just shy of hitting around 18,000 marks, which will be very important to look out onto the chart. So 17,800, the previous swing highs, if taken out, we may see a momentum being accelerating onto the positive side. But in this video, I'm not discussing about the Nifty or the levels to watch out on the Nifty, but the talk of the down, the Realty index. Thursday with around 3% gain, a long weekend, a Monday with around 4% gain. Onto the Realty index, the momentum has come back very strongly. The leader has been Godrej property with around I guess 15% gains in couple of days, Thursday and Monday. DLF with around 10% gains. This has led the index onto the higher side. But now, looking at the index, should you continue to invest into the realty space? Before I start onto the charts, let's look at the constituents and the weights of each stock to form the index. Leading the table, DLF with around 36%, Loda, which is Macrotech Developers, with around 16%, Godrej Properties around 12%. So if I just look at 15% move of Godrej Properties on Thursday and Monday, 10% move of DLF, it contributes towards around 48% weights onto the index. So around 15% and 10%. We have seen index gaining around 7% now. And then Oberoi with around 12%. Then the single digit goes on with Phoenix Mills 8%, Prestige Estate 6.5%, Brigade 4%, Mahindra Lifespace 2%. So Shobha and India Bulls with 1.5% and 1% each. So yes, if I look at the structure, if I just look at the top four, with 36%, 18%, it contributed around 52 plus 12, 64 and 11, around 75% contribution is from the top four. And if these continue to lead onto the higher side, we may see index continue to head higher. Now, if I just look at the first chart on your screen, this is the weekly chart. Right from 2010, or probably if I look at 2007, from the peak happened and then the index fell in 2008 during the 2008 fall. Index has been consolidating since the lows of 2008 till it time broke in around 2021. And if you remember, in 2021 as well, I have done this video onto the realty space. If you go to our archive and look for our older videos, this index has broken out, and since that it's been trending at the higher level. We saw somewhere around 550 levels, now back towards 400, 370, 380 levels. And at that point in time, I've done a video again saying that yes, it is a good time to accumulate the realty stocks. Though markets were uncertain, realty stocks being the volatile index, volatile stocks tend to consolidate, and now the momentum is gaining onto the bullish side. So if you just look at the 12-year consolidation breakout, the red line from right from 2008 2009 till 2021, so 12-13 years of consolidation. Now the breakout has happened. The breakout has been retested. So as a technical analyst, or when you are looking at a technical charts, the retest offers an excellent low risk, high reward entry setups. And a long consolidation, 12 years, 13 years of range, being breaking out, being retested, it certainly acts as a major support. So we have seen a couple of times retest. Now again, if I just look at the momentum is turning northwards, which means that it is turning bullish and heading higher. So it indicates that the long-term trend is still a bullish. After a breakout, it is consolidating, it is heading higher now at a retest point. So it adds a value. Second chart, if I just look at, if I just add the 200 weekly exponential moving average. Now 200 weekly exponential moving average is a long-term moving average, which is nearly now 4 years of average. So if I just look at this 4 years of average of 200 weekly exponential moving average, now look at this. It is placed right at the retest area, the orange line. If you look at on the extreme right, It is right around the retest level, and now prices being index been retesting, index being taking support at 200 weekly exponential moving average. It certainly adds the value for buyers. It is an excellent low risk high reward entry setup, I would say. So 400 plays an excellent low risk high reward. Probably 380 plays an excellent reward. Will the momentum continue? Well, moving on to the top-down approach from weekly to daily now, and if I just add the same 200, instead we have seen the weekly. I'm now looking at 200 days exponential moving average, the orange line. If you look at prices have index have now resisted at around 200 daily exponential. So we have seen swings around these levels, but I think they may act as a resistance zone now. Again, 200 is a psychological level as well. When if you're looking following technical analysis, and 200 days average is followed globally. So I think 200 will play a minor resistance zone over here. The next chart, if I just look at the daily, again this is a sloping trend line. If you look at the upper band red line over here, it gives resistance around 450. So though weekly is very bullish, I think I would look for a buy on dip strategy, or probably if in case daily we break out above the 440 450 band, the momentum may continue to head higher. These levels of around 375 380 onto the downside, 440 450 onto the upside, may act as a major range for bulls or for the bears, and it will be a major breakout if in case we break above 450 440 450. It will also lead to a breakout from the triangle structure, the descending triangle structure. Probably if I just look at the weekly breakout been retesting onto the daily, we have a descending structure of descending triangle. So basically descending triangle is where your highs go lower but the lows remain same. So if I just look at 365 370 lows, were very much similar in 2020 to July, and now back in 2023. So 2022 or 2023 lows were nearly same. Now it is a matter of time where we may see a descending triangle breakout coming onto the charts, and the momentum may continue on to the higher side. The next chart I want to highlight, I basically have multiple times shown this chart or compared the Nifty or the compared the sectoral index against the Nifty. So in this case, I'm comparing Realty index with the Nifty 50 over here. So right from 2010, if you look at the ratio going downwards, which means that Realty index was underperforming against the Nifty. Uh, Say probably if I just look at right from 2010, look at the slope till 2016, it was one way downside. Nifty Realty Index have been underperforming the benchmark index, which is Nifty 50, and since then, and we have even saw a huge consolidation of 12-13 years onto the Nifty Realty Index as well. If I just look at, you can the red circles on your so I have marked the highs which were going lower and lower. So the structure which forms lower high lower low structure is a bearish structure as per the Dow theory. Now this is the first time back in 2022, if you look at the highs was taken out, the green circle mark. Still, if I just keep a theory of lower high lower low structure turning into the higher high low structure is a sign of bullish reversal over here. In this case, we have seen a high being forming the upper crossing the previous highs, which is the green circle, but yes, the low is yet to be confirmed over here. How can we confirm? If you look at the next chart over here, look at this trend line over here. If in case we break out the trend line and cross the previous highs, I believe this momentum will continue on to the higher side, and we may see the lower high lower low structure turning into the higher higher low, which is again a bullish reversal over here. So this will be very important. It's trending at a crucial resistance zone, the ratio chart. Again, this is a weekly ratio chart, so it may not change in a day or two. We have to wait on a week on week basis. So probably not this week or probably not next week. Probably in a month's time we may see this breakout coming out, and that could lead Realty index breaking out from a big time outperforming against the Nifty. And again, look at the stocks into the Nifty relay. Most of the stock, I would say, are into the mid cap space. Apart from, I guess, DLF and Godrej property, which contributes around 48%. Most of the stocks are into the mid cap space. Even Godrej properties into the larger mid cap space. So keep a watch on these. If these ratio chart break out, that could be an ample opportunity for next 2 to 3 years to invest into the realty stocks over here. And this means that a new range may emerge for the realty index. So just to keep a watch on, again, onto the weekly chart, we are very, very bullish. We have seen a breakout of 12 years, 12, 13 years. We retested those breakout. Onto the daily chart, we are yet to break out of the descending triangle, which is again a range bound structure descending triangle. 440, 450, if it's taken out and we convincingly trade above those levels, we may see a new range developing into the Nifty Realty Index. And now, if that continue to head faster than Nifty, we may witness this ratio chart breakout of Nifty Realty by Nifty 50. So it leads that the outperformance may continue onto the Nifty Realty Index. It's a matter of time, I believe. We may probably consolidate for a few weeks and then break out. Or this will be very, very important because the momentum is very, very stronger as current point in time. But Nifty Realty Index has to break out. There should be, at current point in time, we have seen only DLF and Godrej properties being contributing the major. If in case Lodha, Oberoi Realty, Prestige, Brigade, they start to contribute towards the leading Nifty Realty Index, we may see this index heading higher and higher. So keep a watch on these levels, 440, 450 on the upside. And in case we see a dip around 375, 390 levels, I would definitely look for an accumulation around that level onto the realty stocks. So 2 levels to watch out. Signing off, Brijesh Bhatia.
Thank you for tuning into Equitymaster's YouTube channel. If you enjoyed this video, we've got many more valuable investing ideas for you. Click the link in the description to access them now.